Hello, Matthew. This is Thomas speaking from the Money on Chain account. Do you want to test your mic?
Hey, Thomas, can you hear me?
I can hear you perfectly. Thank you so much for joining us.
Great.
So we're joined by Manu. He's our co-host, one of the co-founders of Money on Chain. So very excited to have him as well and to learn a little bit more about DLCs. I will start the conversation by saying that I know very little about them. So I am hoping that Matthew, you can help us understand this whole new thing better.
Yeah, absolutely. Looking forward to it. And very nice to meet you, Manu, as well.
Nice to meet you. Yes, I'm the same like Thomas, and I'm not the technical guy in Money on Chain. I've been mainly building community and the rest. So I'm very interested. I've been following you for several years. Actually, when you were in Ethereum, I learned about your project, but I wanted to learn about your experience with DLCs.
Yes, absolutely. Looks like I think I've been following you for a while as well, but really excited to get into the nitty gritty of DLCs from a non-technical perspective today, and hopefully we can get to the bottom of it so everyone comes away with a little bit better understanding of DLCs. So should be exciting.
Yes, I think if we can get off this space knowing a little bit more, then we would have done our job successfully. So Matthew, I think it would be good if you start by giving us a little bit of your backstory and how you got into Bit and DLCs.
Yeah, absolutely. So I actually originally got into Bitcoin back in the day, back in 2013, 2014. It was actually my dad that introduced me to Bitcoin. He's a bit of a gold bug, was looking for any type of money that he could buy that, wasn't under government purview. So things like gold and things like silver were obviously very exciting to him. And more recently, and then obviously he discovered Bitcoin. And so the interesting thing was he's not very technical. And so I kind of helped him with all of that back in the day. And then to be honest, I kind of forgot about Bitcoin for a couple of years. Myself and my co-founder ended up going to the University of Waterloo. And while we were there at the University of Waterloo, we actually really got into the Ethereum space. As you might know, obviously Vitalik went to Waterloo, and obviously the remnants of the Ethereum community were very strong there. And so we got very interested in the idea of DeFi. Why isn't there a way for folks to be able to get access to financial tools anywhere in the world with just an internet connection? And so we spent some time, playing around with Ethereum, with smart contracts. Eventually, I ended up working at Consensus, actually working on atomic swaps. We were actually doing atomic swaps between, being able to do exchange between Bitcoin and Ethereum. And some of the folks on the team were actually Bitcoin maximalists. And so they taught me about all the properties of Bitcoin and why Bitcoin is so important. And that's what eventually led to, us being very interested in building on Bitcoin. And of course, how do you build on Bitcoin? What are the primitives you can use? Well, DLCs happens to be one of those, which we'll chat more about today.
All right, that is very interesting. So you first started in Ethereum, and then you started developing tools directly on Bitcoin. Did you find any backlash when you made that change to?
Yeah, we didn't get too much backlash. I think so. When we were originally working on, obviously atomic swaps were very like cross-chain. So we had been working on cross-chain things for a long time. So, cross-chain atomic swaps, being able to swap between Bitcoin and Ethereum in a trustless manner. And then we ended up doing another product after that, which was called Atomic Loans. And it was a cross-chain product too. It would allow for folks to lock their Bitcoin on the Bitcoin chain and get access to stable coins on Ethereum. And, after that time, so obviously we had always been kind of in the cross-chain space a little bit. And so when we decided to go all in on Bitcoin only, I think that was a little bit of a surprise in the community. But to be honest, we actually were welcomed with open arms by the Bitcoin community. Lots of folks in the Bitcoin community were very excited about what we were trying to build and what we were working on. And so that was a really, really great moment and exciting. So yeah.
All right. Well, that is good to hear. Sometimes there is a little bit of animosity between both communities, but it's good that in this case that didn't happen. So I'm happy to hear that.
Yeah. You can't listen to the haters, you know.
Very, very much so. And with Money on Chain, we're very often in the middle of both communities, so we understand that better than most.
Yeah, for sure. Well, there's always folks that are, you have people that are purists, you have people that are, you know, and there's people that are interested in building, and sometimes you have to, you know, take steps or go somewhere in the middle, and you never please anyone. But if you try to please everybody, then you won't build anything. And so, you know, we just have to keep building and trying to build things the best way we can. So, yeah.
Very true. Very true. I think that's a very, very healthy perspective. Before we move any forward, I will remind the audience that if you have any questions, you can post them in the messages, or you can request the mic. And now I think we should get started on DLCs. What are they?
Yeah, that's a great question. First of all, what does DLC actually stand for? It stands for Discrete Log Contract. That sounds like a math term, right? For those of you that know, and obviously it is. It's based off of that. The guy who originally invented Lightning Network also wrote the original paper for DLCs. The discrete part of it is actually written as in discrete, as in hidden, basically, because one of the great things about DLCs is that it's hidden on chain, right? So what is a DLC? In simple terms, it's just the ability to create a financial contract on Bitcoin kind of in a native manner. So a DLC it's kind of like a Bitcoin Oracle contract, right? If, say, me and you, Thomas, we want to enter into some type of financial contract, you know, in the past, what we might have done, say we wanted to do a bet, I would say, hey, I'll bet you a Bitcoin that next year Trump's going to win. And you might say, hey, I'll bet you a Bitcoin that Biden's going to win, right? We would just say that, right? We would just say that. And then, it comes, you know, the presidential election comes along, and then you come to me and you say, hey, hey, you owe me one Bitcoin. Or hey, I say, hey, you owe me a Bitcoin. And the other one's like, no, you know, I wasn't really serious about that bet, right? So optimally, if you were to do a bet like that, it would be great if you actually locked your Bitcoin somewheres where, hey, you can verify that the money's actually there. And then when the outcome actually occurs, you know, each party can be paid out how much they're supposed to get. So it's really a simple Bitcoin Oracle contract. You've got Alice, who wants to do one side, Bob, who wants to do the other side, and you've got an Oracle that just attests to the outcome. So that says, hey, this outcome occurred, or this other outcome occurred, and allows for those funds to be dispersed. But what's great about this primitive is it can be used for lots of things. It can be used for a bet, right? Oh, did Biden or Trump win? It can be used for other types of financial contracts, say like futures contracts or an options contract. But it can be used for lots of different things. And on chain, it looks really similar to a Lightning channel. So yeah, that's a TLDR on DLCs.
All right, that is very interesting, because until very recently I didn't know you could do all this kind of stuff in the main chain directly. I always thought you need some sort of side chain or some sort of layer 2. So when did the DLCs first began, and like what kind of applications can we see today?
Yeah, that's a great question, actually. And a lot of folks do think that you need really advanced smart contracting ability. And we'll get into that as well. Like, what can DLCs actually do, and what things can they not do? So DLCs were originally proposed, I believe, by Taj back in 2018. But to be honest, for a long time, not much happened, right? A lot more effort in the Bitcoin community was being put towards Lightning Network. But in the meantime, a couple of folks in a few different companies were doing a little bit of innovation using DLCs. I think Blockstream was one of the first back in 2019 that created the first DLC on chain. And then after that, Crypto Garage and Schrodebits actually kind of started up the space and around DLCs and really tried to get a specification going. Just like we have a specification in Lightning, they started working on, hey, is there a specification that we can create for DLCs as well? And so they put a lot of work towards, hey, like, what is the standard for this? How are things going to work? How are we going to do these more advanced contracts? And this was back in 2019, 2020. And since then, we've experimented quite a bit with DLCs for allowing folks to do kind of more advanced, options strategies for making returns on their Bitcoin. There's a couple folks that have been working on, other applications like loans or even futures contracts. But really, like, this has been a long time coming. And DLCs, I think, are just really starting to come to fruition nowadays, where it's easy enough for people to actually use. In the past, you had to be a developer, you had to be a coder. And we're seeing more applications being built that makes it a lot simpler for people to get access to these tools, which is really exciting.
Yes, no, it is quite exciting. And it seems that we are living in a moment where there is an unprecedented level of innovation and experimentation happening in the Bitcoin main chain. This is completely different, but we are seeing all this ordinal stuff, and it seems like there's a lot more new stuff coming up that, at least from my side, I was very surprised, because I thought all this stuff couldn't be done on the main chain.
Yeah, I completely agree. Well, I think what we've had is we've had more folks be excited about building on Bitcoin, right? Like, there's never been a time where it's been a better time to be building on Bitcoin or building things for Bitcoin. And so I think that's really exciting.
Absolutely, 100%. So I know you wanted to touch on the topics of the robustness and the security behind DLCs. I know you told me that was something important that you wanted to discuss.
Yeah, absolutely. I think one thing to note on DLCs is, and also, like, obviously, I know a lot of the crowd here is folks that have maybe used, RSK or money on chain, and so what are the differences between them? DLCs can't do everything, right? They can do certain things, and they can do those things really well. So one of the things with DLCs is it's a really simple contract, right? If me and Thomas are entering into a bet, there's two possible outcomes. The actual contract on chain is simply a 2 of 2 multisig. And so one of the advantages that you get with one of these types of contracts is that you don't need to worry about, like, any type of smart contract hack that will occur, right? Even if there's like a bug in the code, the only person that can steal your funds is the person you've entered into a DLC with, which is still very unlikely because it's a very simple contract and there's lots of kind of checks and balances in place to make sure nothing goes wrong. Similar to kind of how we do that with Lightning Network. But it can't do everything, right? It can do bets, futures contracts, options contracts. It can all do that really well. If you want to create more kind of advanced things, like being able to create like a synthetic dollar, for example, that's a little bit more difficult, like what's been created on Money on Chain. But there is alternatives, say if you want to do like stable sats where you just short the Bitcoin price. So that's a little bit similar, but not as transferable, obviously. But that's one of the big advantages of DLCs, is that you don't need to worry about smart contract hacks, but it is a little bit more limited in terms of what you can do. And so in that aspect, it's very difficult for someone to be able to come in and hack it or be able to find a vulnerability, because at the end of the day, it is a 2 of 2 multisig, right? So the only parties that really might be able to do something to you are either yourself or your counterparty, or obviously the oracle, right? And those are the kind of the points of risk that are involved in a contract like this. Yeah.
All right. That is very interesting. Is there a running application of something like stable sets? Do you know?
Yeah, I know 1010 Finance is working on implementing stable sats, and what they've been working on is the ability to be able to do futures contracts. So, going long or going short on Bitcoin, and stable sats is simply going short on Bitcoin. Now, the difference between that and say something like money on chain is that, once you've generated, $1 on chain, you've generated that and you can transfer that to anyone. That's transferable. Whereas the difference with something like, if this is done in a DLC manner, is that you need to do a short position using a perpetual. And then if you want to send someone, those sats, you need to close out of the DLC, send those funds over Lightning, and then re-enter that position. So it's a little more challenging to do that, but that's essentially how you would do it. And 1010 Finance has been working on DLCs on Lightning for a while now. There's kind of two types of DLCs. There's DLCs on chain and DLCs on Lightning. And I'm sure we'll see much more applications of both, moving forward.
Okay, that is very, very interesting. So correct me if I'm wrong, but like the difference between a DLC on chain and a DLC on Lightning would be that the Lightning one, your funds are in the Lightning network, but the DLC is on chain, and they would communicate between each other.
Yeah, something like that. I think the main difference there is that the idea with a DLC on Lightning is that you're able to do many different contracts at once without settling on chain. So you would open up a payment channel, right, with a market maker, for example, and you'd be able to do, say today I want to do a long perp, tomorrow I want to do a short perp. I could do many of these contracts without having to actually create an on-chain transaction. And once I've, either ran out of inbound liquidity or outbound liquidity, then, you can either, splice in or close the channel and open another one in order to keep doing trades. And obviously, if you're doing on-chain, then it's you're just doing the communication out of band in order to enter into one of these positions. But generally, right now, doing on-chain DLCs isn't a big deal because the fees are, fee rates are fairly low. Obviously, this was a lot more important a couple months ago when ordinals were going crazy. But these days, it's fine. I imagine during the bull market upcoming, it's going to get a lot more challenging to do DLCs on chain for sure.
Yeah. I imagine that once fees start going up, then the price of running the DLCs will go up with them.
Yeah, absolutely. And it's not too crazy, right? It's not like the gas fees involved in Ethereum where you're paying exorbitant fees. I know the fees are a lot lower on RSK, for example, but doing, if you're comparing it to, gas fees on Ethereum, it's way, way, way less than that. Because remember, all you're doing is opening a 2 of 2 multisig and closing a 2 of 2 multisig. So it's kind of similar to the fees involved with running a Lightning node, right? And so obviously those fees are a lot smaller, but you can get them even smaller by, taking advantage of Lightning too, which is really cool.
Right. Yeah. To me, it's so interesting once we start seeing all these technologies start to communicate between each other and becoming stronger by collaborating. So we have DLCs, we have Lightning Network. Now let's combine them. We have a couple of people that want to ask some questions, so I'm going to allow them in, and then we can move on into specifically what Atomic Finance is working on with DLCs. So we have Offlow and Darren. Offlow, do you want to go first?
Sure. Hey, what's going on, Matt? I was looking into you guys for a while now. Actually, I talked with Tony way back when you guys were first starting out. And my question for you is, when are you all going to be interoperable with RGB? Are you guys looking at specifically leveraging RGB? What's happening in that space? Because I see that RGB has one of the most potentials in terms of development, ecosystem, and scalability for Bitcoin applications.
Yeah, that's a great question, Offlow. To be honest, I've seen a lot of some development over a long period of time with RGB, and I think the main use case that I remember back in the day with RGB was the ability to create assets on top of Bitcoin that are anchored to Bitcoin. So say if you had some type of stable coin like Tether that was issued on RGB, and then maybe you could create DLCs on top of this. The main use case we were thinking of was, say, stable coin settled options, for example. To be honest, like most of the use cases we've been experimenting with right now have been Bitcoin settled, but definitely like something we want to look into in the future. To be honest, I haven't seen like that much adoption of RGB so far, which is why we've been, I was actually following for them for years and didn't see that much adoption of their technology, which is why we've been a bit hesitant to integrate anything there. But always keeping an eye out and to see like, what they're building and if it's something that we want to integrate in the future.
Definitely. I would keep an eye out for RGB and Prime and just the compatibility between them. There's a lot of interesting stuff going on there.
Very cool. Sorry, what's Prime?
Essentially, it's another layer that's supposed to be interoperable with Bitcoin and RGB. It's interesting. It's a bit above most people's pay grade, but I think that it has a lot of potential.
Amazing. Well, thanks for the tip. I'll look into that a bit more.
All right. Thank you so much, Oflo, for that great question. Matthew, do you mind for our listeners, just in case, give a brief description of RGB in case they are not aware?
Yeah, good point. So RGB is it's a protocol for allowing for folks to issue assets on top of Bitcoin. And the way those assets are issued is using essentially off-chain data that are anchored to specific UTXOs. So you can imagine, hey, if I have a UTXO and attached to that UTXO, there's some stable coins or maybe another asset that's issued. And those RGB assets can be utilized, on chain. They can be utilized on Lightning. They've been working on this project for a long time. And I'm not sure at this point, like what the adoption level has been, but I think their main goal is just to allow for assets, or I think they were doing some stuff with like NFT too, just to be issued and attached to specific UTXOs. But yeah, we'll see what happens with their protocol development looking forward.
I just want to add in a little bit. It's essentially a smart contracting platform that basically does everything that Ethereum does, but better due to the fact that it has native privacy and security of Bitcoin at its base layer, and there's no additional token. So literally, it's like smart contracts on Bitcoin.
All right, thank you. That sounds quite interesting. I've been hearing from RGB for a while, but like Matt said, I haven't seen a lot of adoption, and I would really like to know more. So, Oflo, if you have anyone that you would like us to have in a future space, I would be very keen on that to learn some more. Now, Darren, I think you had a question for Matt as well.
Hey, thanks so much for having me up. Hey, Matt, nice to meet you guys. This is super fascinating. We're working with in the early stages of using DLCs in the gaming context for some peer-to-peer wagering experiments that we're running. And so it's a really interesting use case for it. And I was wondering if you could speak a little bit to maybe other interesting things that are happening with gaming, or one thing that keeps coming up that I don't know too much about yet is Nostr. Is that something that you're seeing get adoption, and are there interesting integrations that you're seeing happening between the two?
Yeah, that's a great question. Great to meet you, Darren. So for that, like your first question, have DLCs been used for gaming? So far, I haven't seen too much yet. I know there's companies working on loans, on futures. We're working on options. But so far, I haven't seen too much in the gaming space. So that's really exciting that you guys are looking to kind of integrate that. One thing, if you guys are doing bets, that might be more interesting is Super Testnet was working on I believe it was called a HODL contract on type of Lightning that might actually be better for this use case because it can be used, with a normal Lightning invoice. Like DLCs aren't compatible with the entire, can't be routed over Lightning right now. But you can use these HODL contracts. And so that actually might be better for bets. If you're doing more advanced financial contracts, then obviously a DLC is better. And then in terms of Nostr, I've seen some folks talking about using Nostr for a messaging protocol between different DLC clients, but I don't think anything's working in production just yet. So excited to see what people build moving forward, because I think Nostr is going to be, it's actually a great place for Oracle announcements to be created, and also for like price discovery on different types of contracts. Yeah.
Oh, interesting. Yeah, those are all things that we're looking at. Yeah, we're looking at in the wagering use case, looking at sports betting, use cases like sports betting, sports wagering, and those types of use cases. And so doing Oracle announcements on Nostra is something that we have seen, but it's very early, and looking at different implementations is we're trying to wrap our heads around all the different ways that these things can work together.
Yeah, that's very cool. And I think the reason you might wonder why, like, for folks in the audience, like, why would you do Oracle announcements over Nostr? Imagine you have an API for some Oracle out there, and that API just goes down overnight, and now you can't enter a DLC, or you can't close your existing DLC because you didn't get the signature for the attestation for the outcome. Nostr makes it great because obviously that announcement or that attestation is spread across all the different relays, and so that makes it a lot more redundant. So, but yeah, really excited to hear what you guys are building, Darren, with sports betting. I think if you guys are trying out DLCs, that's really exciting. That's really fun. So really excited to see what you guys build.
Yes, likewise. And once again, I love to see all these different protocols starting to communicate between each other. Now we're adding Nostr to the mix, and that is very, very exciting. We have another new speaker, 22/7. Do you have a question for Matt?
Yes, thank you, Matt. Thank you, Money on Chain. Thank you, Darren, as well. So I'm actually working with Darren, and my question is very straightforward from a developer perspective. It's interesting you mentioned Super Testnet, because it was through his demos that I started working with the PSBTs and just, doing that type of Oracleized transaction. And then he's also seems to be a proponent of Nostr. I really hadn't been able to wrap my head around it. I was thinking more or less about submitting the afterwards of the contracts in a social context. But the way Matt just explained it is absolutely fascinating, because at no point throughout the experience did I heard there was an Oracle dilemma and an Oracle problem, but mostly those conversations were steered around rogue oracles. So a nice simple example of what if the oracle just goes down and then you can't settle these contracts totally just opened my mind to how amazing it is that this Nostr thing seems to go very well with DLCs, and we were able to identify it. But to my question, as you guys are developing, have you guys been building your own APIs, or are you working with other organizations out there that are working with DLCs? Because I thought I was going to be doing raw Bitcoin transactions and Bitcoin scripting, and then I realized that essentially would just add so much time because I would need to build out a proper API. So we've talked with Deep Lake, we've talked with DLC.link, and I'm wondering if you guys built out your own stuff, or how's that going? Thank you.
Yeah, great question, 22/7. Yeah, I think, like, to your question, like, are we developing or have we been building our own APIs? We've been working on, there's a couple like libraries for building on top of DLCs. Obviously, one in the Rust environment, Rust DLC, that Crypto Garage has been working on. And that one lots of folks have been using recently. There's also kind of what we've built called No DLC, built in TypeScript. So there's a couple different implementations that make it a lot like simpler to get started with DLCs and start building. Another thing that's been built recently is the Lava team. They've been working on loans on top of DLCs. Lava.xyz, they built a Oracle implementation called Sibbles, Sibyls, and that's basically an open source Oracle implementation that you can spin up in 5 seconds. And it has a standard API, a standard way of generating Oracle announcements for the Bitcoin index price. That makes it really simple to kind of plug and play and get started with DLCs right out of the gate. So yeah, to answer your question, there's lots of kind of open source implementations out there, and lots of folks that are trying to make it easy for people to get started. So definitely recommend checking those out.
Perfect. Thank you much for that wonderful answer. Oflo, you have your hand up. Is there anything you would like to add?
Yes, it's actually a question because we've got the DLC guys here. Matt, what is the interoperability, or are there any benefits that basically DLCs can get from zero knowledge proofs?
Yeah, that's a good question. I think the only use case I've heard of for using zero knowledge proofs with DLCs is specifically around the offer message. So if we go a little bit technical, not too far into DLCs, typically when you enter one, so if anyone knows anything about Lightning, typically there's kind of a message protocol of sending information back and forth in order to enter into a channel. There's a similar process with DLCs as well, where you send an offer message, an accept message, and then a sign message, and then the DLC is broadcast. So one of the considerations for that is in the offer message, you need to include UTXOs. And obviously, that's giving away a certain level of privacy. So I know Nadav, who used to work at SuredBits, he talked about the idea of actually using zero knowledge proofs in order to contain the UTXO information for the inputs of the DLC. That would be a way to have more privacy, but still be able to send, DLC offers around. But I don't think anyone's really explored that wholeheartedly just yet. But that could be one potential application for sure.
Hey, Matt, do you have any familiarity with Liquid?
I've played around with it, but not too much, to be honest.
Okay, I'm just going to ask it just for asking's sake. Maybe you can answer, maybe you can't. But how would DLCs essentially work on Liquid? Because obviously the Elements code base is very similar to Bitcoin, but natively it has native privacy at the core. So yeah, how would DLCs work with confidential transactions?
Yeah, that's a good question. We were planning to investigate this actually a couple of years ago, but we never did. So I'm not 100% certain what that would look like. I imagine you might need to make some small modifications to the protocol just to include some additional information to be able to reveal the information behind the confidential transactions when you're doing the messaging protocol back and forth. But I couldn't tell you 100%. I'd have to do some more investigation there. But if you guys are looking at doing some stuff with Liquid and creating some open source libraries for DLCs on Liquid, that would be very cool. I think the community would be much appreciative of that.
Thank you, Oflo. Those were great questions. I'm happy they will be recorded and available for the podcast later for all our listeners. Matt, I think it's time that we go into atomic finance specifically. Like, what are you guys building and how are you using DLCs?
Yeah, absolutely. I guess to give a bit of background on us, so we started, what we've been building with Atomic Finance is just a really simple way for folks to earn a return on their Bitcoin in a way that's actually transparent and doesn't expose people to the kind of black boxes that we saw last year. So if we remember, the folks that claim to allow you to get, say, 8% or 9% APY on your Bitcoin, the way we like to think of it is it's 8% you'll never enjoy on Bitcoin, you'll never see again, right? We saw this with BlockFi, we saw this with Celsius, and it was a big problem, right? It was a big problem where a lot of people use these services and they ended up, being rugged to a certain extent, somewhat on purpose, somewhat, due to other things in the ecosystem falling down. And so we wanted to think, well, there must be a better way to allow for folks to make a return on their Bitcoin that is passive without them, being exposed to so much risk of a black box. So that's what we started with Atomic Finance. We've been working on a way to allow for folks to get access to automated trading strategies, so automated options strategies, specifically designed to allow folks to, have a conservative way to earn return. Now, these aren't risk-free, right? There's no free lunch in Bitcoin. There is a risk. On the back end, we use options, right? So we use what's called a covered call. So what that means essentially is we, if if Bitcoin rises significantly in a very, very short period of time, there is a potential for a small loss with your Bitcoin. But what we've tried to do is automate this strategy and put the necessary measures in place, to reduce the likelihood of that substantially. And so that's what we've been working on with Atomic Finance. We allow for people to do options using DLCs, and we make it just as simple as possible for them to do so. And soon we're going to be allowing folks to be able to create their own options as well in a manual manner. So we're really excited to be building that.
All right, wonderful. It sounds similar to what Money on Chain is doing, because with the B Pro, we're trying to allow people to generate a return on their Bitcoin, and with the B Pro, there's also a risk in the short term, but the risk is when Bitcoin goes down rather than when it goes up, and the same as Atomic Finance is designed to work on the long term. So it's interesting the similarities there. So how do you say that Atomic Finance differentiates itself from other financial tools that would seek to do something similar?
Yeah, I think the main differentiator there is obviously we're using DLCs, which is a little bit different, and it's kind of obviously it's native. But I think the other obviously, well, there's two types, right? There's what exists in DeFi, and there's what exists in traditional finance. So obviously for traditional finance, it's pretty obvious, right? You're not giving your funds to a black box. You get to see, from that perspective, exactly what's going on. And then from a DeFi perspective, we took the route of, hey, we're not going to create a token. We're going to try to do it as simple and secure as possible. And then obviously we've put a lot of work into our automated strategies in order to, make them kind of as robust as possible. And we've got lots of kind of material on our blogs that talks a little bit about that. So I think those are really the biggest differentiators for us versus other folks.
Perfect. I think that's very good for our listeners to know. Now, I have some questions from the community that were sent to me privately. So we have one of our community members asking, why not build Atomic Finance on Rootstock? Specifically, as Rootstock is cheaper than doing transactions on the Bitcoin layer 1.
Yeah, that's a great question. So we did consider building on Rootstock. One of the things we were concerned about was the bridging process and the process to actually get funds over to Rootstock. But that's something we might investigate in the future, allowing for folks to do some type of smart contract on Rootstock. But the other thing as well is we were really happy with kind of the security around DLCs and the fact that they were just so simple. So that's something that some of the high net worth folks that we've talked to have really liked about DLCs, how simple they are and how robust they are. And so that's why to date we've been focused on building on DLCs so far. Yeah,
that makes sense. Personally, I would love to see an integration there at some stage in the future and find out what can be built once you start combining Rootstock and DLCs and Lightning. And I think it's definitely a space for people to keep an eye out, because I expect a lot of innovation to come out in the next few years. Now, we have another question from our community members saying the current API is 2.47 since August 2022. Do you expect that APY to increase with the bull run? This is in question specifically about your conservative strategy.
Yeah, that's a great question. So we have, I think he's referring to, so we have the conservative cover call strategy right now. And one of the things, for those that aren't super familiar with options, you might know that when Bitcoin volatility is very low, the premiums of those contracts tends to be a lot lower as well. And so obviously for us, that has resulted in kind of a lower return over the past couple months, because Bitcoin, let's be honest, Bitcoin's been acting like a bit of a stable coin. And so generally when the volatility associated with Bitcoin goes up, the premiums go up as well. So you might think, oh, during the bear market, it's a great time for covered calls. Well, yes and no. There's generally a little bit less risk, but also you're getting less return. And so generally, when the strategy makes the most returns is during the bull market, or when the volatility in Bitcoin is much higher. And that's kind of historically when the strategy has performed very well. So definitely expecting those returns to go up over the next couple months and the next years or so.
Great. Yeah, in the case of money on chain as well, for liquidity providers, they earn on the fees. So the more the platform is used, the more people earn, but also most of the gains come tied to the price of Bitcoin itself. So when there's more volatility, we see higher earnings as well. So I think there's another similarity there. Then the last question from our community member, he's asking if you could explain a little bit more where the API is coming from, like how this strategy works a little bit more in depth. And you mentioned that there was a small risk in some scenarios. So if you could elaborate a little bit more about that.
That's a great question. So where does the risk actually come from with the APY? So first of all, where does the APY come from? So we've gone and we spent quite a bit of time developing back-tested option strategies for atomic finance. And obviously, the one that's available on the app right now is the conservative covered call strategy. So historically, if we go all the way back to 2019, and we look at the kind of historical performance, that's where we're getting that APY from, in addition to the recent trades that have been taken over the last 6 or 7 months now. And so that's where that historical APY comes from. Now, the other consideration is obviously what is the risk, right? So what is a short call? What is a covered call? In essence, what you're doing is you're putting your Bitcoin into a contract, and we do weekly options. So, what is the price of Bitcoin right now? It's around 25,000. So imagine I enter a call that says, hey, I'm willing to sell a call. And as long as the Bitcoin price by this upcoming Friday stays below 30,000, then, I make, maybe 100,000 or 200,000 sats, for example. So that's essentially the risk that you're taking, right? You're willing to, sell that upside for, when it hits that 30,000 in order to get a premium or kind of a coupon. And the thing is, obviously, if the Bitcoin price goes above 30,000, then you lose a portion of your Bitcoin. It's equivalent to selling your Bitcoin at that price, at 30,000. Now, you might think, wow, well, if I'm doing that every week, well, that seems a little risky. What happens if, we get a large bull run in the middle? And so what we do in the strategy is we use TA filters, essentially, to filter out uptrends and in general, and generally it looks for, sideways trends or downtrends. So you might, if you look historically over the last 6 months, there's been months where there's been, 2 trades or no trades or 1 trade. So it's not always in a position. So we're looking to avoid those uptrends that are occurring in the market. So we avoid taking something that's going to, end up with you, losing some of your Bitcoin. And that's why it's called, obviously, the conservative covered call strategy, because it's not always taking positions. And sometimes it's, the reality in trading is sometimes it's not a good time to take a position. And that's kind of the mentality that we employ when we wanted to build this out for folks.
All right, that is very, very interesting. And if any of the audience has any follow-up questions on that regard, you can always write them down or request for the microphone in case I was not clear enough. Otherwise, I think it will be good to move into this, the part of the podcast that I enjoyed the most. I used to study philosophy back in Argentina. So I always like to ask every founder, everyone that's working on a project on Bitcoin, what's the philosophy behind the project? Because to me, it was what attracted me to Bitcoin first was the philosophy of freedom and individual sovereignty. So I want to ask you, what's driving you to build on Bitcoin?
Yeah, so I think in general, when we look at when we look out there and we look at what's available for people that own Bitcoin, for Bitcoiners, what's available for Bitcoiners today? We have hardware wallets, right, where you have your cold storage. We have obviously Lightning that allows for folks to do payments. But if you want to do anything related to financial contracts, really that needs to be done on an exchange, right? That's the only thing that's available. And so for us, it was really about, well, why isn't there an alternative to centralized exchanges for being able to do anything financial related with your Bitcoin, right? I remember learning from a company here in Canada. They run an exchange, an OTC exchange, and they were hedging, right? Back in the day, they were using BitMEX to hedge their contracts whenever someone sold or bought Bitcoin. And then BitMEX was banned in Canada, so they started using FTX. And what happened? FTX blew up, and they lost a large portion of their balance sheet because of that, simply because they were trying to hedge. And so, for us, that was just so much motivation to say, hey, there needs to be something better. There needs to be a better financial primitive for Bitcoin so that folks can have the ability to hedge or have the ability to speculate on, the price of Bitcoin without being exposed to, centralized exchanges or custodial risk that exists out there. And so that's really where our philosophy comes from, is to, if Bitcoin is going to become the world reserve currency, then it needs to have a settlement layer and a financial layer that is sound. And so really it's all about building, sound finance for sound money.
I love it. We are very aligned to what Money on Chain is building. I think we're pushing in the same direction, which is one of the reasons why I wanted to have you in these spaces. Now, a question: is atomic finance decentralized, or because you're talking that you're trying to build an alternative to something like FTX or BlockFi and those kinds of projects that we now know what happened with them. So what would the difference with atomic finance in the way it's structured be? And how decentralized it is, how much people need to put the trust in you and your team specifically? Do you have any thoughts on that?
Yeah, I think it comes down to where are the risks, right? So if you're thinking of any type of contract that you enter, what are the risks? What if X person disappears? What if Y person disappears? And so one of the nice things with DLCs in general is that there's no counterparty risk. In the example I gave of, hey, Thomas, you're betting on Trump and I'm betting on Biden for the next presidential election, right? If since we've gone and we've put that Bitcoin into the DLC, then that means that there's no counterparty risk, right? Now, where do the risks lie? It lies obviously with the oracles. And so in general, that's really the riskiest point of a DLC is, if the oracle creates the right outcome, or what happens if the oracle disappears. And so in general, obviously the riskiest part for, using atomic finance is the oracle. So we run the oracle right now, and we're the sole oracle, but we do have plans to move to multi-oracle in the future, where you would rely on not just us, but us and another oracle, which can obviously reduce the risks for folks. And so that's really the thing to keep in mind. You don't need to worry about, hey, is the chain I'm using secure? Obviously, the Bitcoin, blockchain, main chain is very secure. You don't need to trust your counterparty. You do need to trust the oracle, but at least with the oracle, you can go and you can verify that they've attested to the correct outcome. Yeah.
Yeah, wonderful, wonderful. With Money on Chain, the oracle problem was a big one to overcome. And definitely the more oracles we can have, the less trust we have to put in each specific one. And I love what you said about DLCs having no counterparty risk, because that's the beautiful thing about Bitcoin. It's money without any counterparty risk. You can hold it by yourself. It doesn't have to be backed by anything else. So I think what you're doing is very aligned with the whole Bitcoin ethos, which personally, that's why I got into the space to begin with. Now, I wanna move into the challenges that you have faced in building this application, and what challenges do you see of people adopting this technology? at the moment?
Yeah, I guess first it might be good to get into like the challenges of like building this in the first place. Obviously, when we were first starting out, there was no kind of base, software or base applications to kind of utilize for DLCs. So, a lot of the initial stuff we had to build ourselves. And you might think in Ethereum, you just have smart contracts, you deploy it, you have Infura. Obviously, it's very centralized, but it kind of takes care of all of those things. I'm sure you guys ran into similar challenges with money on chain. And with DLC, so we had to build up a lot of that infrastructure from scratch. How do you have an Oracle API? Or how do you manage a market maker wanting to provide liquidity? How is that done with DLCs? So there's a lot of like kind of initial development that you have to do to get it off the ground. I think for anyone starting today, you're at a huge advantage because lots of things have been built. Lots of libraries are out there or different software that you can use for DLCs, which is really exciting. And then I think the challenge moving forward is really education around, hey, what are DLCs? Everyone hears DLC and they're like, what's that? Why is it useful? Why, what's the difference between that and something else? Isn't it just a centralized exchange? And really making it simple for folks, right? Like if someone's using an application and they're having to do it on the command line, well, we're not going to get much adoption, right? We're not going to get many folks using that. So I think it's the same thing for Bitcoin finance, right? If it's not easy for people to use, just like if there's not an easy application or an easy like front end for people to use money on chain, or there's not an easy UI for people to access DLCs, then people aren't going to use it. And so, that's one of the things that we've been really focused on is making it as simple as possible for folks to use DLCs and get access to them in a UI that's as simple as, just pressing a button. In fact, like what we believe is that non-custodial or, really DeFi on Bitcoin or sound finance for sound money, it should be simpler than using a centralized exchange because you don't have to go through all the KYC. You don't have to go through all of those processes. We should be able to make this process even simpler for people. So, that's really our goal and our vision, and I'm sure it's for similar for you guys at Money on Chain.
Yes, absolutely. I think we're trying to do the same. Make these technologies as easy for as many people to use as possible. Specifically with Money on Chain, most of our users, we see them in Latin America, in Africa, in those places where there is no other alternative. And for those people, these kind of technologies are much easier to use, and that's where we see a lot of adoption. And we're trying to, hopefully, by making all these technologies easier and getting the UI and the UX right, we can get a lot more people to benefit from them. Yes, Manu, you have your hand up.
Yes. How are you, Matt? I was listening. Some of the question was mine. But the English of Thomas is much better than mine, so I let Thomas to do many questions. One question I have is exactly about the UI of your application. I saw that you have like your own wallet. In our case, we would like actually to delete our DApp, our access. It's actually in IPFS, but we would love not to maintain that it would be done by anyone who wants to do that. Are you planning to do that kind of strategy, or is more holistic? From my understanding is actually you have your own wallet. So you are trying to provide a complete user experience to your users, right?
Yeah, that's correct. I think one of the challenges with DLCs in general is that, and I know for Money on Chain, and you guys have a bit of an advantage there because you're able to take advantage of the RSK chain itself, which can hold a lot of the state involved with what's going on. And so it's possible to actually create a DApp that's like actually just stored in IPFS where it can be accessed anywhere. One of the challenges with building on DLCs is that there's a lot of off-chain information. And the other thing too is that it's a challenge to actually enter into a DLC. If anyone has tried out the Atomic Finance app, you might remember, hey, it took me 1 or 2 minutes to be able to enter. And why is that? Well, in the process of entering a DLC, there's lots of off-chain signatures that need to be created for all the possible outcomes that can be attested to by the Oracle. And so that was one of the reasons that We started with building our own wallet because, let's be honest, there's no kind of wallets out there that support DLCs right now. We would love for there to be more wallets that support DLCs. I know the DLC Link guys have been working on, they've been integrating like DLCs into Xverse and I think Hero Wallet. I think they're called Leather now. And so we would love to, see if we can build them some things in a, some type of web app or a DApp, for example. As of yet, there's been no hardware wallets that have added support for DLCs. And part of that's because, there's a computational requirement to create all those off-chain signatures. But I think as we move forward, we're just going to see more and more kind of support for DLCs. And that'll make it even easier for us to be able to integrate with those folks. So I'm really excited to see more and more people, building support for DLCs moving forward.
That's great. Yeah, I just want to quickly say that we had the Xverse team scheduled for a Spaces. Unfortunately, we had to reschedule, but we're very much looking forward to speaking with them as well. Oflo, I see your hand is up. You want to add something?
Yes. Question to Matt again. Is the DLC portion of your wallet open source so that more people can, start adopting that within the community?
Yeah, absolutely. The DLC part is open source. We have 2 libraries associated with that. If you go to GitHub/Atomic Finance, if you look up Node DLC, or we also have Bitcoin abstraction layer. And both of those are used within the app to allow for folks to enter a DLC. Right now, in part of the specification, it's not completely compatible with Rust DLC just yet, but we have 2 open PRs there. One of our open source contributors, Max, has been working on making compatibility between the 2. So very soon they will be compatible. But those work today, and you can try out DLCs as much as you want. Yeah.
Well, that's good to hear. I think we are all very, very big fans of open source technologies here. So we're getting to the hour mark. And before we close, Matt, because I don't want to take a lot of your time, I just want to give you a time, if you want, to quickly talk about your future plans for Atomic Finance, even though you have mentioned a few things during the conversation about where you guys are going. But if there's any specific that you want to mention, any product developments that we should be aware of, potential partnerships or collaboration that are down the pipeline, just want to give you a few times for you to do that.
Yeah, I appreciate that, Thomas. I think one of the things we're really excited about this upcoming month, at the end of the month, we're going to be launching manual options on Atomic Finance. So you'll be able to do long calls and long puts. So we're really excited to get that out to folks and have them try it out. We're also excited to be launching additional strategies within the app that specifically focused around long options. So really excited to get that out on the app. But moving forward, I think the main thing for us is, obviously, we're focused on on-chain DLCs right now, but one of the things we want to migrate to is obviously DLCs on Lightning as we get closer to the bull run. And so that's something that we're going to be focused on next year, getting DLCs on Lightning so we can reduce on-chain fees that people are paying within the app even more. But really, the long-term vision for us is just to build an application that makes it easy for people to access financial tools for Bitcoin without having to give up custody, without giving their Bitcoin to a black box. And we're just gonna, what do they say? Bear markets are for building. So we're just gonna keep plugging away and keep building, and excited to push out more stuff for sure.
Absolutely. Well, I think there's a lot of things that we can look forward to. And personally, I do hope we see more of these kinds of technologies and things like money on chain to keep making all these financial tools available for everyone without needing to put so much trust in, like you said, these black boxes that historically, time and time again, have let's just say they keep giving us reasons not to trust them. So we are very, very happy to be involved in developing the alternative that we believe is going to be best for everyone. So Matthew, thank you so much for this conversation. I think for me personally, I will leave this conversation knowing more about DLCs than I did when I went in, and that was my objective. I hope listeners will experience the same, and we will publish this as a podcast in the next coming days. And yeah, I invite everyone, if you want to go and try the Atomic Finance app, at least check it out. And I hope we can do maybe a space sometime down the line, maybe when you guys do these DLCs on Lightning, and we can talk about how that goes. Yeah?
Absolutely. Let's do it.
All right. Thank you, everyone, for joining. I'll invite you for next week, same time, same day. We're going to have another speaker, and we will keep learning about what is happening in the world of Bitcoin. Because, like we said, it's a very exciting time. There's a lot of building happening, a lot of new stuff, a lot of experimentation, innovation, and like Matthew said perfectly, bear markets are for builders, and we are here building and talking to all the different builders. So, thank you.
Amazing. And I just wanted to say thank you so much to you, Thomas, for hosting this. This has been really fun, and love that you're getting the conversation started with building on Bitcoin. Before we left off, I noticed that one of the early kind of, not developers, but researchers around DLCs was on this space a little while ago. At LL Foreign, Lloyd Foreign, he was doing the initial cryptography that allowed for DLCs to be created on chain to get today. So I just wanted to give a shout out to him. Follow him at LLFOURNE. And obviously a shout out to all the folks that, kind of did the initial work to make DLCs possible. SuredBit's Crypto Garage. Here at Atomic Finance, we're standing on the shoulders of giants, and they've done, God's work in kind of getting this space set up and getting the initial development done. And so all of the things that we built would not be possible without them. So obviously want to give a big shout out to them.
Yes, perfect. We are all in the shoulders of giants. And you just remind me that I forgot to ask you our famous last question. I'm sorry. The last question, and we will close with this. What would you ask Satoshi if you met him? Now we're talking about standing in the shoulders of giants. We are all standing in the shoulders of Satoshi. So what would you ask him?
Well, I got to ask Satoshi the classic question. What does he think of drive chains? No, I'm just joking. That's a really hard question. Yeah, maybe it would be. What do you think of drive chains versus APO, CTV? I've got to ask him the classic one. And did he choose the 1 megabyte, max block size? Was that just a random number, or was that on purpose? I haven't looked at his early quotes, but curious about that.
Yes. I am curious about that too. There's a lot of things about Bitcoin, like why 21 million, why 1 megabyte, all those questions. I don't know if it was just random or there's a deeper meaning behind it. We'll probably never know, but it's still fun to ask and ponder.
Yeah. Well, maybe he wouldn't tell us too. Maybe he would say, "Sorry, I don't. If you don't understand, I don't have time to tell you."
Yes, very, very true. All right, everyone. Thank you so much. I will see you next week. Matt, thank you again.
Thanks, everyone. Thanks, Thomas.
Thank you.